Get ready to peer behind the curtain of the private equity universe with each episode of Best But Never Final. Hi, I'm Lloyd Metz, joined by Doug McCormick and Sean Mooney. Together, we'll navigate the corridors of private equity, revealing the uncommon knowledge, challenges, successes, and lessons that drive the world of private equity and business forward. Let's go.
I am very glad to be back here with my friends, Doug and Lloyd. Doug and Lloyd, how are you guys?
Hey,
Great,
Sean.
Sean.
Hey, Doug. Happy hump
Good
day.
to see you guys. Here we go.
Absolutely. Let's get it on. So I think this is another really kind of interesting episode for those who are aspiring to get into private equity, and probably also interesting for those maybe the most recent generations who came in, and also those who've been in for a long time, to just discuss really the evolution of the pathways into private equity, how they existed when we were all coming in, and how they've evolved over time. Does that sound like a good plan, Lloyd and Doug?
You got it.
Sure.
All right. So let's kick it off. And so we're going to go into the Wayback Machine here. And we're not going to say how far way back, but let's just say it's been a while. And so maybe, Lloyd, if you want to kick it off, what was your kind of path into private equity? Talk about really from the beginning and really start with the precursor roles. And I'd love to hear, A, how you kind of approached that path, and B, how those precursor roles kind of prepared you in some ways and maybe other ways it didn't.
Okay. In the Wayback Machine. So we'll adjust the dial on this one, but I'll go way back further than I think you may have intended. But I remember reading Forbes magazine at an early age. And that's where I first learned about investment banking and leverage buyouts. And investment banking sounded super cool, super interesting. You made a ton of money. You worked really hard, but you were shaping and crafting all sorts of interesting transactions and deals that were in the newspaper all the time. And then leverage buyouts sort of flew in the face of what my limited understanding of like the efficient market theory, right? Like the stock market's supposed to be efficient. So how can you come in and pay a premium to the stock market price and then ultimately make 3, 4, 5, 6, 10 times your money? Like that just seemed crazy to me, but it seemed super cool. And it seemed like a really massive multiplayer competitive game, to put it in kind of video game terms. And I was hooked. That's what I wanted to do if I had the chance. And so coming out of college, went into investment banking, still didn't know jack about investment banking. My parents knew nothing about it. They thought I was going to be a stockbroker or something. I barely knew what investment banking really was, but that was my entree into finance and Wall Street. Went to business school, learned more, and we can talk about that more later. And then after business school, went back into investment banking for a couple of years, and then got an invitation to interview with some private equity firms and got my first job, and off I went.
Let's double tap on a couple of those. And for me personally, as a kid who grew up in Texas, I had no clue even what investment banking was. And the only way that I figured it out was because my roommates were all from northern New Jersey, and all their parents were in the industry. And so I asked them, like, what are you going to do? And they said, I'm investment banking. I go, what's that? I have no clue. Doug and I were talking earlier. It was like, I grew up working in the back of chemical plants. Like, what was even the premise, like, to even know that? I know there's a Forbes article, but how did you kind of figure out, like, oh, this is a way that's going to get into this interesting career?
So the way back is father was an engineer at IBM, and one year they hit their sales goals or whatever it was, and they would get stock as their bonus. And my homework assignment every night was to watch the news, and they would show the ticker tape, the closing prices, and my job was to see if IBM stock went up or down. And that's how I got introduced to the stock market and kind of was into it. And then my father came home from work one day and was like, I hear this magazine is good if you're interested in stocks. And it was Forbes. And I just read it cover to cover and just went from there. That's how I got exposed to it. And during the sort of high school era, that's when investment banking was starting to really emerge and become a thing. And so there were articles about investment banking and different bankers and different firms every issue, right? That was what was driving the business news at the time. And so that's how I became aware of it. Went off to college intending to be an engineer of some kind, and that's where I did all my internships, but they weren't as interesting or as exciting as Wall Street or investment banking, finance, investing seemed to me to be. And so I decided not to fight that feeling and just at the turned down offers to go work at GE and other places and decided to try my hand and jumping in on the investment banking pool.
Hey, Lloyd, it just strikes me as I hear your description of growing up, and Sean as well. I mean, in some ways, I think investment banking in the 80s was the growth industry, the way e-commerce was in the 2000s, the way AI is in the 2020s. And so I think we all gravitated to like the industry that in our formative teen years was really exciting and growing and evolving quickly.
That's right. I think that's a fair characterization. Absolutely. But also just on the investing front, it was a more active form of investing to me, right? So even after business school or during business school was debating whether or not to follow the investing interest into the public markets, the liquid markets, but ultimately was pulled back onto the private equity side because you sort of didn't have to wait for transformation, or you didn't have to be an activist and rattle the cage and try to browbeat management into making change. With private equity, you drove the change. And to me, that seemed a better, more interesting path to go down. Right or wrong, rightly or wrongly.
And maybe before we jump into when you got into private equity, I'd love to drill down a little more on your investment banking time. And so investment banking historically and traditionally has been the primary path into the deal side of private equity. And were you doing kind of the New York version of investment banking, the West Coast version? Where were you doing your
the New York version?
Okay, so that was the version I did as well. And so tell me, what was it like?
Well, time out. You can't get off the hook that easy, right?
Hey,
So-
Lloyd, I didn't know there was anything but a New York version. Come on.
Here's what I'll say.
You open that door, Sean.
All right, this is shaded in the
Unpack
90s.
that.
Let's just say there was the New York version, and then everyone else got to work human hours and we're all slackers. So, this was the version where you get crushed and you worked 120 hours a week, and your mother comes and visits you and starts crying because you're so gaunt because you haven't been home in 60 hours.
Wouldn't it be nice to be gaunt again? I mean, back in the good old days.
Yeah. When I look back at it, it's a good point. I kind of wish I had that spiny figure again. Now that it's branded as the New York version where they just crush you. So,
there are people in other parts of the country I think would take issue with your characterization, but let's get on to the real point of your question.
Yeah, that's all I know. I don't mean to stir up the hornet's nest, but what was it about that experience? And I'm guessing this was an analyst program where it used to be 2 to 3 years, and now it's probably more like a 2-year program. We'll talk about that. But what was about that experience that you think ultimately prepared you for the rest of your career to get into private equity, which probably maybe informs a lot while it's still kind of one of the primary feeders into private equity?
Yeah, well, with investment banking, you learn a lot of the fundamentals of financial analysis of companies, right? So balance sheet, income statement, cash flow, and the components of it. And you can make the case that that's a good starting point. I think that's probably a good fundamental starting point for a lot of business careers, to be honest. But when you're talking about private equity and you're talking about growth, and what does growth do to your balance sheet? What does growth do to your working capital? What does growth do to your fixed assets? That's part of how you start learning in investment banking. You also get a heavy education in selling and sales, right? Because an investment banker is trying to figure out how to sell a company to somebody who would want to buy it and figure out who would want to buy it. Or you're trying to sell bonds, you're trying to sell an equity offering in an IPO or something, right? So how do you position the company? How do you describe the company? How do you describe it in such a way that it will be attractive to investors or capital providers? So that's also a useful skill as well. You do learn some degree of diligence, right? So questions to ask a company about their income statement, their balance sheet, their cash flow statement. How do they grow? How do they shrink? Why this business line is growing faster than another business line or what have you. So those are all good fundamental learnings and lessons that you get a lot of reps in investment banking. And that would be the third piece, I would say. So not only the understanding the financial 3-part financial statements and how a business's performance affects those or is reflected in those, not only on diligence and questions and how to understand how to get information from a company, how to position that company to be attractive to a capital provider, but you also have a view around a good business with time. And that's the thing. Investment banking gives you a lot of reps, right? And so with more reps, you can start to develop your own point of view, either your view as well as the external view. What makes a good company? What makes for a good company? What makes for an attractive company to capital providers? What makes for a good business that is profitable or growing or high margin or whatever it is? You start to develop some of that experience when you get many, many reps in investment banking. So it's good for those 4 reasons, I think.
I think that's absolutely kind of aligns with the experience I had, whereas you get lots and lots and lots and lots and lots and lots of reps. But you're learning the fundamental levers of value and how to value a company, what makes some companies more valuable than others, and vice versa. And the only thing I might add is that because of the intensity of at least the experience that I had was it teaches you a lot about grit. I think Doug got probably a more real form of the experience than us talking about woe is me. Like sometimes my sushi got delivered late when I was 22 years old. But you're working 120 hours a week. And when they told me 120, I never believed that could be true. And then when I'm in my first year and I haven't taken a day off in literally 6 months and I just work 45 hours without leaving, it teaches you a new muscle that you didn't have. And I think, at least for me, it combined me as like you find an ability to consume information rapidly, and it trains you through pattern recognition in ways that you might not get just because of the intensity of that experience. And maybe I think an interesting way to structure this is we'll kind of walk this sequentially as kind of our first roles, and then we move up and through into PE. So, Doug, you had a different start to your career. And at the risk of uncomfortably flattering you, I'd say a more noble path than I took, certainly. So why don't you share kind of your beginning story?
So first of all, there's a couple common themes between me and Lloyd. I had a father who was very interested in investing. And so at an early age had established a habit or an interest or a hobby in investing. And so then went to the academy, took economics because they don't offer a business degree, did service, and then decided I was going to make a transition to business school. So we'll talk about business school later. But unlike you guys, I actually really needed that as a way to segue into understanding like the language of business. And then my first job was at Morgan Stanley, and actually one of my first colleagues was Lloyd. So we go back to that time together. I had a different experience. I was an associate, which in some ways I think is even a more painful position in an investment banking team, not because you work harder, but because you're the middleman between like the bosses who are selling and the analysts who know the work and are doing a lot of the work. And so that's a kind of challenging place to be in the team. But I would say, regardless of where you are as a junior person in the bank, the things that I hear you guys saying are you learn the language of business, you get a ton of reps with a ton of variation. I like to tell people like the great thing about it and the bad thing about it is it's dog years, right? So 2 years of investment banking is really 5 years of experience. And I think you do get the grit. In some ways, I think the grit is really a branding opportunity, right? Because I think people look at folks who have come from that experience and they know, hey, they know how to really elevate their game, at least for a short period of time while the project gets to a critical stage. So, anyways, I think we all feel blessed to have had that experience. The same way I feel like my service opportunity was a wonderful experience from a growth perspective. I think the couple of years at Morgan Stanley that I had was foundational in having a perspective. But candidly, like I didn't find it as rewarding as I was hoping. And I think the transactional nature of investment banking can make it challenging because you want to see the outcome. You want to feel like you're accountable to the plans that you often are selling. So I found it to be a great experience, but one that I ultimately decided to pursue private equity because there was more of a tighter link between the plans you established and owning and being accountable for delivering those plans.
One thing, if you're open to it, I'd love to just get a little bit more on the backstory. Is one thing, and that I've certainly see from our vantage here in private equity, there are a significant number of very successful people in private equity who started their career in some way, shape, or form through one of the branches of the U.S. military. And I'd be curious, what is your perspective on that? Because there's clearly something there, and you're learning something as part of that service that it must be setting some sort of foundation as well.
I would say in many ways, when I see service members kind of transitioning to business, I think the trajectory is slower to start, right? It takes us a while to kind of get up to speed. We don't fully appreciate the early lessons that you guys had in your investment banking analyst days. But I do think that service experience can often be valuable in your later career stages. So I think the service members get a great opportunity to practice leadership at an early age, values-based management, understanding how to be a general manager in a very intense environment. So I think it's a great experience that can be applied broadly in business. And candidly, I think the private equity universe is simply one aspect of the business. I do, in some cases, think private equity is a leadership light. And so I purposely try to find ways that I can exercise my leadership values, either with portfolio companies or internal to our team, because that's a skill set that I'm comfortable with. But I don't know that that's broadly practiced in the industry.
And Sean, just to jump in here for a second, I agree wholeheartedly with what Doug's pointing at. You had said something earlier about investment banking teaching you some of the fundamental levers or drivers of business. It teaches many, but it falls short in some key areas, and leadership and the importance of, I'll just say, management. But the difference between management and even leadership, I don't think investment banking really does a good job of teaching. And the military branches, I think, do a much, much better job of that in a way where you can actually have an impact at a fairly young age in your career progression as a private equity professional, or even investment banking, but certainly private equity at the portfolio companies, your interaction with the leadership team at your portfolio companies, and how to motivate people and understand where they're coming from and get them to do what you want them to do. That's what you all learn in the military all day, every day, right? So
yeah, Lloyd, it's kind of interesting, right? Like in some ways, and this is by design of the investment banking business model. I'm saying to you, I'm going to give you a very difficult job, but I'm going to give you the highest talented, most highly motivated young folks you can find. And I'm going to give you enough financial resources to pay them whatever it takes to make them do the painful things you're going to ask. So that's one scenario. And you compare that to a service choice where you have a population that's much more representative of the broader US population, and you're going to pay them less and you're going to ask them to do arguably more challenging, more dangerous things with less directly aligned incentives. And so I think by definition, that really causes you to get good at the leadership aspect of it.
Yeah, both those points are spot on. And I certainly felt that, I think, as I was coming up. It's interesting. So I grew up in a family business, and I would look at my dad, who was building a company that at some point was kind of getting bigger and bigger. And as a kid, I grew up going to work with him on Saturdays. And then as soon as the federal government would allow, he gave me a hard helmet. Like, oh, man. But the lessons I learned in investment banking was exactly, I think, what you shared, Doug, and that you have incredibly capable, motivated, smart people who are high achievers and are objective oriented. And so they're going to do whatever they need. And to your point, I 100% also felt this idea of, like, I didn't feel like I was getting trained to lead people. I was getting trained to do whatever it took to get something done. And my review virtually every year at the end of the year was, your review is your bonus. And literally you'd get that one day before it hit your checking account. It would be so unsatisfying because you're like, well, what can I do to get better? And it's like, just do better, kid. You're like, oh, okay. Like, what do I do with that? And it's like, just do better. Like, and here's 5 more deals to work on. Like, ah. And so I think those are great observations. But I do, with that and having said, I think that's the reasons we talked about is one of the reasons it's such a great training ground for people who hope to enter into it, because of the levers of the value, the repetitions, the laps. And Doug, I think your point about dog years is absolutely correct. This episode is brought to you today by HCI Equity Partners, a lower middle market private equity firm focused on partnering with family and founder-owned manufacturing, service, and distribution companies. ICV Partners, an innovative private equity firm supporting management teams of leading companies at the lower end of the middle market. And Blue Wave, the business builders network connecting the most proactive business builders in the world with the best of the best service providers for critical, variable, on-point, and on-time due diligence and value creation needs. Now back to the episode. So maybe if we kind of move along our sequences, and let's talk about business school. At least back in the day, business school was a standard part of the process. I'd be curious from both of you, why do you think people attend business school, and what did each of you get out of that experience that helped you through the subsequent progressions in your career?
So business school, again, was aware of it, was intending to go to business school when I graduated from college. It was just something that seemed like it was a really neat, cool thing to do. Again, back to those same articles. They were all MBAs from these great schools. At the time, I was like, wow, that'd be so amazing if I could go there. So was able to keep that in mind and not forget my GMAT scores. They didn't expire on me, so I was good on that front. But in the work context, I had an incident, if you will, where I was working with a person who had come out of business school. And it just, the competitive part of me just, like, I was getting my ass kicked. I was like, just the frustration at seeing the power of simple frameworks and how you organize your thoughts in writing and putting them on paper is so much more effective and powerful than a lot of times just spoken commentary. And that's what I experienced. This person would come, and it wasn't anything super elaborate or fancy, but just typing something out in an organized way on a single sheet of paper landed with such impact and much more. It just got through to that VP or that MD or whoever we were working with relative to my oral comments based on like some handwritten notes that I'd prepared before we sat down. And it was that kind of experience. I was like, you know what? In case I might have been wavering about going to business school, it was not even a question anymore, right? Like if that's the kind of stuff you learn there, those little tactics and techniques, sign me up. So that just pushed me even with more enthusiasm to go to business school. And we can talk about that more, but I definitely think in preview, it was worth it then, and it's worth it now. And we can get into more detail about that.
So first of all, I would acknowledge, I think business school for many people, I'll put myself in this category, it creates an opportunity to pivot, right? So I had done my service and I realized that was not going to be a career for me. So I was looking to move to a different industry. And so I really needed that experience. I told you I was a hobbyist investor. I think I understood what a PE multiple was. I didn't know what E meant. So how to get to E was a mystery to me at that point. So I really needed the education. But I think people think about business school and go to business school for really 5 different reasons. One is, listen, I don't think it's just simply a math question. It's an experience, right? It's a life experience. The second is, I think it can be branding. You go to Harvard and there's some good brand aspects of that. Candidly, there's some bad brand aspects, but there's a branding element to the choice. The network is ridiculously good. And I think the older you get, the more you appreciate like the value of the network is significant. And then I think there's an optionality aspect of going to school. I think it gives you the chance to pivot at that point in time, but also pivot in the future. And then the last thing I'd say is there's the skills aspect. And I think that's by far and away the least important, right? Like the things I actually learned in the classroom, the concepts I don't think are that earth shattering. And I think I probably with diligence could have done much of that through my own personal study. It's certainly an aspect that's positive, but I don't think that's why people really go and find value in the experience.
Both of those resonate a lot with me. And I probably had a slightly different path to it in that. So I had gone from investment banking to a private equity firm, and I progressed reasonably quickly in my career there. And I got to the point where I had reached vice president level. And one of the big challenges, if at least back then, if you go to business school, you're going to come back as an associate. And so I was saying, man, I'm going to come back to a demotion and I'm going to have to pay for this thing. And so I just kept on charging along. And you're kind of a well-honed machine when you're going through that gauntlet for so many years. I was like, oh, I don't need this. And a couple of my bosses or mentors really took me aside and said, Sean, you really should think about this for all the reasons, Doug, that you shared. And they said, well, one of the things that we want to invest in you. So what if we put you through business school on our ticket for you? The catch is we're going to put you through the executive program. And the catch is you're not going to work any less. And so what I call is my blur years, where it was every Saturday, every Sunday, 12 hours of class each day. You blitz through it in 20 months. And in the same vein, I'm working just as much as you do in a normal private equity career. And I'm newly married. I've got all these things going on. I think I tabbed it up. I released wires on 6 deals from class over the course of those 20 months with my little BlackBerry. In my hand. But I think because this was Columbia, where there's a number of people like me, the professors were just used to it, and they would just give us a pass, like, all right, go do your thing. And I'll tell you, I went into it thinking, okay, I need the credential. It'll be a tiebreaker for the rest of my career. Let's go do it. But as I reflect back on it, I think, Lloyd, for a lot of the things that you also shared, I think it really helped round me out a lot and helped with my presentation skills and working outside of this machine of private equity, which can be kind of a closed loop. And it filled in a lot of the shades of gray outside of things that I didn't know before that I thought I did. And so I think I was better for it as well coming out of it. But I was a skeptic when I went in because I thought, oh, I have to do this. And I'm back to my analyst working hours again. So I don't know if any of that resonates with you all.
Yeah, it does. And I differ a little bit with Doug. I think you do learn a lot more than people like to admit in business school, not just in the classroom, but from my classmates, where there are classmates who would say some things in class. And I'm sitting there going, holy cow, where'd you get that from? And literally would talk to them afterwards, like, how did you come up with that? Right. And you learn about their different experiences at different companies or different firms and different, whether it's consulting or corporate role or something. I think you do learn a lot more than you generally hear people admitting to. And the tricky part, at least for me, my experience, a lot of the concepts that you learn, you come out of business school, you have your first few jobs, you don't always put them into practice in those early years after business school. I find that later, and even today, those concepts are still useful. And having that pattern recognition that you might have learned 20, 25, 15, 30, whatever it is, years ago, it's still applicable. Some of the concepts are, I don't want to say evergreen, but they're long-lived. And so to me, that's a good thing. It's worth going just for that alone.
Yeah, Lloyd, I think that's fair. I meant to highlight, I think a lot of the learning is informal and out of classroom, as opposed to like a undergrad experience where it's like the content is the whatever you get from the teacher.
And I'll tell you the interesting angle from the path that I did for those of you thinking about the executive program. It's a blur. But what's really interesting is while you're in your job, you start trying the things they're talking about and you bring it in. And we would go through these case studies. And I had tremendous sympathy and empathy for the poor professors teaching case studies because 80% of the time, the case study they were trying to teach, there was someone who was at that company then that worked there. I would say, like, that's not at all how it happened. And it would just be this like tremendously kind of challenging experience for some poor, really smart professor who's just trying to get tenure. And they're like, leave me out of it. Like, come on, kid. And so I think that's really helpful, I think, setting the stage. That I know a lot of people today who are in that kind of pivotal point in their career are thinking about. So hopefully that gives some context.
Just one comment to acknowledge as we think about like our experiences versus folks navigating this decision tree today. My general sense is when we all went through school, most people that went through school were kind of going back to business school anywhere between 2 and 4 years out, right? And so they're graduating in their mid to late 20s. And I think that experience gap between undergrad and business school continues to extend a little bit. So I think most folks are going back to business school later. And I think you got to combine that with at least the private equity industry continues to mature in a way that entry points happen earlier and earlier. So it's an interesting kind of juxtaposition. And we're talking about getting into private equity in the context of business school. The mismatch of timing, I think, is increasing.
And maybe that's a good segue here. And so we've kind of worked through these precursor roles. We've talked about business school. And the time that we came through private equity, And then after that, we kind of, all three of us ended up or stayed in private equity through there. And then we went on to the normal cycles that we've talked about in a number of these other episodes. And so let's talk about today and what are the pathways into private equity? How do you get there? And are there more or less pathways than there used to be when we started in the way back days? And so why don't you kick off, like, what are the pathways into private equity today through kind of that first role and then business school and then afterwards? And how maybe does that differ depending on which part of private equity you're trying to get into? And being specifically, there's now multiple ways. There's deal teams, there's ops teams, there's everything in between.
I'll try to peel the onion on this a little bit, but I would say there are more pathways into the business, but those entry points seem to be earlier and earlier. And so I'm always surprised, having watched both of my kids kind of grow up and navigate some of this. Relatively early in the college experience, kids are already seeking internships in the finance industry broadly, money management, investment banking, et cetera, because they're trying to compete for their junior year internship, which is likely to lead to a job. And the most common track continues to perpetuate. The folks that end up getting an opportunity to be a private equity analyst or associate generally do so from a 2 or 3 year investment banking career, which was the byproduct of that junior internship. And so that's probably the most tried and true and most common route. But I think also there are a lot of other entry points. I personally believe if you back up and talk about the things we said that were offered in investment banking, it was this dog years intensity, it was varied experiences, and it was highly capable teams. And I think you can find that in like consulting as well. I think you can find that in the startup industry. So I think there are other ways to kind of get those similar experiences that are equally good at branding. The problem is the network overlap isn't so good or isn't as good, right? Because we all have a tendency to hire folks that had similar experiences to us because we understand them. So Lloyd, when you're interviewing an investment banker, you know kind of what that experience entails and how they can fit into your organization. And then just to comment briefly, Sean, I think you're asking also how the operating roles have proliferated at private equity firms, and that's an additional entry point. And in many of our episodes, we talk about the nature of the game today is building value in the businesses that we own. And that comes not only from the skills that Lloyd has, but also by complementing those skills with company operators. And so I think there's a role and a legitimate entry point and career path from folks that are coming from the operations side.
Yeah, I do wonder. I don't have a clear point of view on this one, but for some of those other paths, let's say from the operating role, do you come into private equity a little bit more tenured, right? Because you've got to get more experience either as a functional executive, or it takes you a bit longer in a corporate environment to then have P&L responsibilities to now call yourself an operator. That would be useful to a private equity firm. I wonder, coming straight out of college, I don't think you can go do 2 or 3 or 4 years in an quote unquote operating role and then jump into private equity. I'm not so sure that it works that way. I still think consulting is a really good path into private equity because there's a whole bunch of fundamental levers that you learn as a consultant, even as an analyst or an associate, that are super relevant and useful in private equity.
I think those are both really kind of accurate. And it's interesting from this vantage here at Blue Wave, where we get to see kind of a large number of private equity firms are doing it. And the thing that kind of strikes me as I look at it and compare and contrast versus when we were coming up is it seems like the deal side is still a quite linear path where you need to get in at the beginning. It's harder to kind of come in from the side at more senior levels of your career because it still is very much an apprenticeship role where you need not 10,000 hours, but 20,000 hours to become a deal partner. It seems like the one on ramp into private equity that's from the side is after business school, where you can come in. But it's still like you're starting on this path and you got to maybe think a little further earlier in your career to get in that. One of the great evolutions that I've seen, though, is there's a lot more inroads and on ramps through the ops side. And I think you're right. I think private equity is hard for anyone to start right out of college. I'd encourage someone to go get experience outside of it before they come in because there's just the expectation of having skills and these organizations are small and they don't have the training machines built in. at least at the earliest stage. But if you think about the ops team, you can come in multiple ways because it's not the skills that you're bringing are so specific and specialized that you're going to get at a operating company. I still don't think you can come in like year one, but particularly the larger private equity firms are mechanizing so that they have many consulting firms almost within their organizations. And I think that's one of the best evolutions of private equity is that there's so many inroads now. Whereas it used to be maybe when we were coming up, if you weren't on the deal team by the time you're 26, you couldn't come in unless you were like a CEO of a company.
A little bit of that. I mean, we're talking about different paths that exist now that may not have existed back when the Kennedy administration ended and Doug and I got into the industry. But I know some firms will take their associates, their pre-MBA associates or analysts or whatever you call them, and then give them a third, sometimes fourth year at a portfolio company, right? Because they were watching that business, they were helping that business evolve and grow. And oftentimes those businesses don't have enough young, aggressive, curious minds that know how to work hard, right? So putting those people in a role at a portfolio company actually can help drive value. And it's a good experience for that person coming out of private equity. They get more of an operator's perspective. So it's not just the financials and the numbers or the KPIs, but just what's behind that. That's good experience.
Yeah, couple comments. First of all, we've had really good success with taking junior folks that have been in associates and then pushing them out to a company for a period of time. I would say it's less about their contribution to the company, although I think there was. I think it's for them to see the difference between theory and reality. Like you can have a bunch of great ideas and you can insights from reviewing the financials, but does that message get to the operators that have an impact on the P&L? That real world experience, I think, is super valuable. One other thing I want to just comment on, Sean, that you highlighted is, as we think about these entry points of operators, I think you can define the operator from a functional perspective, like it's functional expertise, or I see people defining themselves as industry experts or domain experts. And so I just think it's important to distinguish if you come from the operating side, are you developing a functional expertise or are you developing an industry expertise? And I think we're being a little too rigid in our definition of being in a private equity model, because I would argue CEO of a private equity backed portfolio company is like 80% of the good and maybe you get rid of some of the bad, right? Because you still have this mandate, you got access to capital, you got really interesting incentives to align you around a common end state that creates value. So I think being a PE-backed CEO, I would say while you're not in the GP, that's an interesting way to think about being part of the organization.
I think those are all really great points. And I particularly appreciate the points you said where you're kind of encouraging young professionals who maybe have the foundations of private equity to then go get a little bit of operating experience. As I reflect back on my career and even just kind of this crazy journey here, having done Blue Wave, I always tell friends of mine, I was like, wow, if I were ever to go back into private equity, I would have been so much better. It's just like, you're like, what do you mean you can't do 15 things at once? And now I'm like, you can't do 15 things at once. So I don't know that anyone would ever have me back. But if I did, I'd be like Neo looking at the ones and zeros cascading down in the matrix. And so I think that operating experience is something that I wish people did more of in this kind of like in residence program, almost that like you guys are describing, where you encourage people to go down to the Portco for a year or two, I think would add tremendous value for the next 20 years. So, Lloyd and Doug, let's bring this all back kind of to full circle and maybe bring us back to the kind of where we all started. And if you were each talking to or getting questions from someone, let's say they're in college and they're interested in this whole world that they have an understanding of as private equity, what advice would you give them as they're thinking about nurturing how they grow and develop and positioning themselves for success, and then also potentially a career in private equity?
Sure. So really, really interesting question, Sean, and maybe we can have a whole nother episode on this later, I guess. But I would say to anybody who's interested in private equity, whether you're in college, out of college, in a job, or what have you, there's so much information available on the industry. and the individuals and the leader. Like every private equity firm has a website. You can go read bios for days if you want. There are podcasts, there are publications, there's newsletters, there's blogs. Like you just got to get out there and start consuming the information. But most importantly, you also got to remember it's an investing job. And do you want to be an investor? So there's a whole bunch of stuff to read about developing an investor's mindset. What does that mean? How do great investors think? There's a whole school of thought that says great investors are just fundamentally wired differently than everybody else. But let's put that aside for a second. But do you find that interesting? Like, don't lose sight of that. Too often I run across people who went to the school, did the internships, got the investment banking job, got this job just to kind of almost like check the box. But there's no curiosity. There's no initiative. There's no view of upside and risk and losing money versus making money and some of those decisions that all investors have to weigh. And so you're kind of missing the point if you don't get that part right.
I think it's very, very sage advice. Is let's look at the big picture. What's really important? You're going to be an investor. And there's certainly, we can talk about the internships and things like that. But if you don't get the first part right, you're just going to be forcing something upon yourself that you're never going to find satisfaction in, if that's not truly what you're interested in. Doug, how about yourself?
Yeah, Lloyd, what you said resonates with me, and I'll say it slightly differently, which is like everybody that's pursuing this industry, they're likely smart, they're likely very ambitious, hardworking, but like it's a competitive industry. You're not going to be good at it unless you're really passionate about it. And that passion kind of manifests itself in intellectual curiosity, in stick-to-itiveness. And I also think this is a business that's really like multifaceted in terms of skill sets. Like it's selling, it's interpersonal skills, it's being an independent and sometimes contrarian thinker. And so I would just encourage folks, if this is what you think you want to do, you kind of got to run through walls, right? And I say that in the context of like not let anything get in the way of your goal and be committed and passionate about developing your skill set in the area. I also think, Lloyd, there's this balance between you say, be careful just to go check the boxes, but I'll use one of your analogies, like play chess, not checkers. I do think that the skill sets and experiences that position somebody to pursue the industry are often multiple. So it's not like you're just going to do investment banking. I think you got to continue to position yourself with a differentiated set of experiences and brand.
Those are both really good sets of advice. And maybe what I will double tap on is, A, you got to have the first principles. You got to have the curiosity. You got to have the drive. But I'd also say if some of our listeners here have kids that are interested in this, if you're a young aspiring professional in the space, also be thoughtful about how the inroads are structured. When you're in college, think about getting that internship that's going to prepare you, that's going to give you some of the skills so that you're not coming in an unfinished product. And to build on your analogy, Doug, if you're going to play chess, not checkers, you got to play several moves ahead. And today, if I took myself, this kid from Texas who didn't know any of this, I don't know that I would be able to kind of still maneuver my way in the industry that's orchestrated the way it is now. It doesn't mean you can't, and it's not impossible. But what we talked about in one of our earlier episodes, Lloyd, when you said like, be like water, go where it flows easier. And so if you can, try to do that as well, but don't lose the first principles, Lloyd, that you talked about in the beginning.
Right. I don't disagree with that, but I guess call me a little extreme, but Google is like the best thing ever. Like there's so much information about so many people. And I appreciate folks who reach out, right? And say, hey, can you tell me about your career? But you know what? My career is on LinkedIn. So like the expectation is you should, even if you are that kid from Texas, like you can ask some next level, second level questions if you just go see me on LinkedIn, right? Or Doug or anybody. So use Google and the tools at your disposal to learn a bit more than historically was ever knowable before now, right? Like use that to your advantage.
Hey, if I could, I'd just like to offer kind of a counterpoint to this whole conversation. So there's a saying up at the business school at Harvard, which is if you want to predict the industry that's about ready to crash, look at where all the business school students are going. And that's an indicator, right, of that you've hit the top of the market. And so like we've just talked about, everyone wants to go into private equity. And I kind of referenced investment banking in the 80s. That was a growth industry. Arguably, alternative assets has been a huge growth industry for the last 20 years. And I think in some ways it's rapidly maturing, and the prospects for wealth creation and career progression, while it's a much bigger industry, the trajectory is probably going to be different in the next 20 than it has been in the previous. And so if you love the content and you love investing, I think this is a great choice. But I wouldn't do this necessarily because you think it's a guaranteed path to riches, and be willing to be a contrarian, the way we talked about here is that good private equity investors are, to go figure out what the next big growth industry is, right? Is that artificial intelligence? Is that something else? Who knows? But I just think putting the maturity of the asset class in the context of your decision if you're a 25 or 20 something making this choice.
I think that's absolutely right. This is a maturing industry. It's not just something where you're going to get on a boat and the tide will just continue to rise. But if you're passionate about it and you have the drive, let's go. And talk to people like Doug and Lloyd. If you grew up in the same town as they did, reach out to people who, friends of neighbors, use ChatGPT, read books, those type of things. So maybe just to round this out, and we could go forever on this topic, and it's a really important one. If you could give advice, 1 or 2 books that you think a young, aspiring professional should read to learn the art of just being good at business and life, what would it be?
Green Eggs and Ham.
I love it.
Hands down, because that's selling and not giving up, right? That's finding different contexts and occasions, because all of those things matter, right? Being on a boat is different than being with a goat, right? Being on a train, different than being in the rain, but you keep it up and you'll get through, right?
I love it. No, I think that's a great one. Doug, how about yourself?
I'm going to give you one that's an oldie, but a goodie. And so when I was young, I read One Up on Wall Street by Peter Lynch. And it's really a simple, straightforward read, but I think it'll help you determine if you really like investing, because it talks about products that you would know and have an affiliation with and have a view on, will it be successful in the market? And I think that's the kind of principled perspective that you got to take as a PE owner of, I'm going to be in this thing for a long time. It's not a trade. I'm trying to get my head around conviction of a long-term opportunity. And so anyways, that's an easy, fun read.
I think, Lloyd, you hit the kind of the skills for life. And then Doug, you mentioned kind of this foundational investment book. So I'll check the box on the slightly more modern, but just kind of what makes a business great. And so I would go with Good to Great, which I think is another kind of primer. And if you read each of these 3, that will position yourself for success in private equity. That's truly what you want, but also anywhere else that you can and should and will go in life.
Yeah, no argument here on Good to Great.
All right. Well, I think we've shared a lot. I've learned treasure troves of things that I wish I knew before, and things that I sometimes wish to forget from the earlier traumatic days of my career. And so, once again, guys, a really, really nice, informative conversation here.
Appreciate the time.
Awesome,
Thanks,
guys.
John. Thanks, Doug.
A special thanks to HCI Equity Partners, a lower middle market private equity firm focused on driving transformational growth through consolidation strategies by partnering with family and founder-owned manufacturing, services, and distribution companies. Learn more at hciequity.com. ICV Partners, an innovative private equity firm supporting management teams of leading companies at the lower end of the middle market. Learn more at icvpartners.com. And finally, Blue Wave, the Business Builders Network, connecting the most proactive business builders in the world with the best of the best service providers for critical, variable, on-point, and on-time due diligence and value creation needs. Learn more about Blue Wave at bluewave.net. For further information on HCI, ICV, and Blue Wave, and relevant topics discussed here in the episode, please see the episode notes or links.
The views and opinions expressed in this program are those of the individuals presenting and do not necessarily reflect the views or positions of any other persons or entities, including those referenced herein.